Hello and welcome to the Islamic Finance Weekly, where we discuss the key developments in the non-interest finance market. Since the evolution of Islamic finance, there has been a clear need for a realistic assessment of the value, growth, and development of the market in Nigeria and Africa. It informs the need for nations like Nigeria to understand the factors that influence the attraction of Sharia-compliant capital to the nation and what determines the flow of private equity, instruments like sukuk funds, trade finance, and real estate investment funds to emerging markets. This is why the assessment, report, or analysis of credible international and national financial rating agencies is vital for the non-interest finance market. In today's edition of the Islamic Finance Weekly, I will be discussing Fitch Ratings assessment of Islamic finance growth in Africa and Nigeria with Mr. Bashar Al-Natoor, the global head of Islamic finance at Fitch Ratings. Good afternoon, Mr. Bashar. Nice to have you on the show to discuss developments in this unique market.
Good afternoon. Thank you for having me.
My pleasure. Islamic banking products are only just beginning to gain ascendancy in frontier economies like Nigeria. Do you see significant opportunities for non-interest banking products in these countries?
Thank you for the question. And I think the question is very key. So do we see potential? The answer is yes. But is it easily achievable? And I would say there is a lot of ways and there is a lot of methods where we saw other countries that they were able to grow their Islamic finance industry in different models. And maybe just at the beginning, let me just explain the two key models, which is something that is called a top-down and a bottom-up. The top-down is you have some countries that are having agenda to grow the Islamic finance industry, and they are having milestones, strategies, and work plans to achieve that. And I think the best example of that is actually Malaysia, and they had that more than 15 years ago. And now they have a very developed Islamic finance industry where, just for example, if you look at their debt securities, you'll find sukuk is 60% and bonds is 40%. Their Islamic banking industry is above 30 plus percent of the banking sector. Takaful, similar story. And this is driven mainly by a country where you have a government and institutions that are trying to develop Islamic finance. The other type, I would say, is bottom-up, where you actually have a demand from the customers, the corporates, the investors to grow an Islamic finance industry. And in that type, the actual driver is these stakeholders doing transactions and growing the business from their side. And the clearer example of that is actually Saudi Arabia, where if you look at their banking sector, you will find that Islamic finance is around 80% of financing, which is Islamic banks plus Islamic windows. If you look at their sukuk market, for example, in the past few years, the sovereign only issued sukuk. They don't issue bonds on a local level, although internationally they issue bonds on sukuk. Now, usually in other countries, you have a hybrid of both. So you have interest from the stakeholders and you have a strategy from the government in varying degrees. So this is how usually Islamic finance is grown in other examples. And in Nigeria, it is at an early stage, and in many other African countries, where you have the sovereigns trying to still lay the ground, do some support, put the frameworks for that industry to advance.
Thank you very much, Mr. Bashar. Major countries now use Islamic finance to fund their sectors, particularly, as you've mentioned, Malaysia. Malaysia is one of the best examples to use as a country that issued sukuk to fund major sectors for their economy. Thank you very much for those insights. So when we look at the issuance of sukuk, it seems to be the flavor of the season for Nigeria. As an expert in this field, are there other non-interest Islamic finance instruments that can support infrastructure development?
Okay, I mean, if we are to talk about Islamic finance in general and maybe zoom to the infrastructure, Islamic finance has key main pillars, which is Islamic banking, sukuk, takaful companies, which is Islamic insurance, fund managers that operate in Sharia, and corporates that operate in Sharia. Now, the biggest sector usually globally is actually Islamic banks, which is between 75% or more, and sukuk is around 15%, and the remaining constitute the remaining. Now, in Nigeria specifically, we've seen the sovereign issuing local sukuk in the past few years. If you look at the Islamic banking industry, there are around 2 banks, Islamic banks in Nigeria, but they don't represent more than 1% of the actual banking sector. Takaful is a similar story, and fund management is a similar story. Now, if you are focusing on infrastructure, usually infrastructure deals in emerging markets and in countries where Islamic finance is active, they are either financed by bank loans, and they can use, usually in these banks loans or syndications, you will have tranches that are Islamic finance, where Islamic banks and Islamic investors are part of that. You have sukuk, as you alluded to, but sukuk can be international and can be local. And you have the other source of funding on the private placement and private level. However, the most dominant one in countries where Islamic finance is active is actually government themselves funding these projects. And this is something because of that in majority of countries where Islamic finance is active, the debt capital market is not yet developed enough. Yes, we've seen in the past few years a lot of development. Yes, Malaysia is the most evolved when it comes to that, but Malaysia is focusing on local market. When you see their activity on the international market, i.e. US dollar issuances, it's very limited, specifically in the past few years.
It's quite challenging that we have only 2 full-fledged Islamic banking in the country. So what do you think we need to do to increase the non-interest banking in Nigeria?
That's a good question. There is a lot of factors that are considered as limiting factor to the Islamic finance industry and Islamic banking industry particularly. The first one is actually awareness. It's awareness of the public of the offering of Islamic banking and the way that Islamic banking operates and how is it operating and how different it is. The other one, even for the ones that are there, it's the confidence. So even if you have some awareness, you don't yet have the confidence in that banking that it is really giving you what you need. The third one is actually you are dealing with a country that when it comes to the infrastructure and the legal frameworks and the Islamic banking industry, it is still developing, although the government has done some initiative on that, but it still has a long way to go where you have the right framework and the right tools that enables banks to operate, thus and attract customers, etc., etc., etc. And the last point is the way that the banking sector and penetration rate in Nigeria is still low. That is a positive and a negative because it shows that there is a lot of room for improvement, and Islamic finance can actually play a role in inclusion, as you will have some participants that has religious reasons for not entering into the banking sector. So it can actually bridge that, and a limitation because you're starting already in a sector that needs a lot to be done, not only on the Islamic finance side, but also on the conventional side.
There is a need for a lot of improvements for the non-interest banking to flourish in Nigeria. How do interest and non-interest financing commingle in the same economy without creating valuation and asset composition challenges for investors wishing to calculate overall portfolio yields?
I will answer that question into 2 dimensions. The first dimension, talking about the banking sector. We've seen in many countries that Islamic banks and conventional banks operate side by side. In some other countries, it's not only side by side. You have the conventional banks having Islamic windows, offering Islamic finance for the ones that are interested in it. So the way that we've seen the industry growing in various countries is, in some countries, they allow only Islamic banks to offer Islamic products. In other countries, they allow Islamic banks to offer Islamic products, and also conventional to have windows that offer Islamic products. So the way that we've seen it, there is a mechanism, and they've coexisted, I would say, usually there However, that will entail to have the right legal framework and centralized bodies that allows the Islamic banking also to operate, and the tools to allow it to have a same footing when it's competing with the conventional bank. And that is something that is usually a challenge for countries where Islamic finance is not really active. Now, if we move to sukuk or Islamic bonds and compare it to conventional bonds, the vast majority of the sukuk that we rate is actually senior and secured, i.e. at the end of the day, it has a similar risk profile compared to the bond. And I'm here talking about the ones that we rate. And they are what is called asset-based, i.e. in a more blunt way, the actual recourse and the payment obligations lie on the issuer, whether it's a government or a corporate or a bank, not on the underlying assets. And that is the type that we are seeing across the board globally being more prominent. The other type where the performance of the sukuk is linked to the assets is less, I would say, and it's very rare to see that even on the global level. So I would say that the existence of Islamic banking, specifically in countries where it is now established, has been there with an enabler, a key enabler, which is having the right environment, legal framework, awareness, education that allows it to flourish and compete properly with the conventional banking.
So how do you rate non-interest income assets without running foul of discounted cash flow considerations?
The thing is, as I've mentioned, and maybe reiterate the point, if we are asking about the cash flows and the way that sukuk are structured, in the rating portfolio that we have, which is around 118 billion outstanding US dollar, more than 150 issuances of sukuk, it is to a large extent mimics a senior and secured instrument, i.e. the cash flows and the responsibility of payment of principal and periodical distribution lie with the ultimate obligor, which is usually a sovereign, a country, a bank, or a corporate. Thus, the cash flows, the sukuk has top-up mechanism and other mechanisms that allows it to get in our rating portfolio, the same rating of a bond, thus carrying the same credit risk and translating to the similar cash flows of a bond. Now, there is limited legal precedent when it comes to sukuk default and how they're treated. The regulatory and legal and court frameworks in many of the Islamic countries is also at an early stage of development of bankruptcy laws and restructuring laws. This is a limitation for the sukuk and Islamic finance industry in many of these countries.
Definitely, Mr. Bashar, I must commend your efforts. Recently I saw your report on the Global Sukuk Market Dashboard for Q4 2020. Let me ask you this question. What general or specific challenges have you faced in rating Islamic finance assets globally?
An interesting question. The thing is, the key challenges, I think, will be blunt. Because the sukuk and the Islamic finance needs to comply with Sharia principles. And Sharia principles, by their nature, they have a lot of profit and loss sharing. They have other aspects that ultimately translate to a more complex structure. So you end up with a structure that, if it was in a conventional way, could be a plain vanilla simple bonds, where if you want to achieve something similar in sukuk, you would need to go through various legal agreements, various structures and various agreements to allow you to comply with Sharia first. And then if the intention is to have a credit risk similar to a bond, also accommodate that side. And that adds to the complexity. So I would say complying with Sharia in sukuk and other more exotic financing methods is adding to the complexity. Thus, having more time spent in terms of structuring, in terms of analyzing, in terms of rating, and could also entail additional costs. And that is something that is considered a challenge, which translates to one of the key issues in the Islamic finance industry, which is standardization or lack of standardization. That is something that the industry is trying to deal with on a local level, regional level, and global level.
Well done. So you have an upcoming report on Islamic finance in Nigeria. What are your expectations of Islamic finance assets in Nigeria and other sub-Saharan Africa economies?
Currently, the Islamic finance industry in Nigeria is at an infancy stage. It is trying to gain traction. The government has done a few attempts in terms of issuing sukuk on a local level. They did not issue international sukuk. They've issued bonds, but not sukuk. The Islamic banking industry, as I said before, is less than 2%. Takaful is the same story. So it is starting from a low base. However, as we said, because Nigeria is one of the most populous countries in Africa, and it's actually one of the top 5 Islamic populations. If you look at the population of Nigeria and compare it to the Islamic population, it's one of the top 5. The potential is there. Now, are we going to see that potential translated into actual growth and concrete step? It is something to watch and an interesting development that we need to see and learn.
Okay, what rating challenges will need to be addressed within the Islamic cultural context of riba or shirk?
I mean, I think, as I've maybe mentioned before, so having the right frameworks, infrastructure, regulations, and instrument and tools that allows Islamic banks, the Takaful company, etc., to operate is a key challenge. We've seen attempts in various African countries and in other countries and in Nigeria to start that phase, but it is still at an early stage. Awareness and confidence by the customers and stakeholders is another challenge, and the level of development of the debt capital market in general. So not only sukuk, but debt capital market, banking sector penetration, takaful and insurance penetration. So if you look at countries like Nigeria, the insurance industry, let alone the takaful one, is still at an early stage. Penetration in the banking industry in general is still at a low stage. So there is a lot of these that are, I would say, not Islamic finance related, but they're related more to the development of these countries when it comes to the banking industry, insurance industry, and that capital market industry that needs to be bridged. And then you need to go the extra mile to develop the Islamic banking industry and having the right frameworks for it to grow.
Are there any emerging and innovative Islamic financing framework that you would like to share?
The Islamic finance industry by nature is actually a product of innovation and a need of the Sharia compliant investors, customers, traders, etc. And it was birthed, it was started because of that. So it has a lot of innovation. Yes, we've seen recently as the need for developing capital market in many of the countries increasing. Thus, we've seen them tapping into other forms of, they're trying to do green financing sukuk, sustainable sukuk, Formosa sukuk, subordinated sukuk. So they're increasing the offering itself. And they're trying to use even technology in some aspects of the industry, whether in the banking side, takaful side, or even sukuk side. So yes, there is a lot of room of innovations, and the industry is trying to cope with that, in addition to the other requirement that it needs to flourish.
Now, we describe this session as very thought-provoking and enlightening for our viewers and investment community. Thank you, Mr. Bashar, for taking our time to interact with us on this important subject matter.
Thank you very much for having me, and it's my pleasure. Take care. Assalamu alaikum wa rahmatullahi wa barakatuh.
Wa alaikum salam. Enjoy the rest of your day. My guest today, Mr. Bashar Natoor, in his 2015 Opposite the Editorial page published by Fitch Ratings, opined that Islamic finance could enable African sovereigns to broaden their investor base, providing some diversification away from traditional Eurobond investors and local market participants. Nigeria is already benefiting from the sukuk-funded infrastructure projects across the nation as critical roads that will improve connectivity and economic activities are making progress in terms of construction. This shows that there is a lot of opportunities for Islamic finance to support economic stability and growth in Nigeria and Africa, with the right policy framework and the effective evaluation from global rating agencies like Fitch. And that will be all for this edition of the Islamic Finance Weekly. Log on to www.proshareng.com to watch more videos and read news stories on Islamic finance. Follow us on our social media handles displaying on the screen. For questions and comments, send an email to Bukola Akinyele@proshareng.com. Many thanks for watching and see you next edition.